Hey, I suspect you are sitting here watching my portfolio shrink over the last couple of days of last week and now the start of this week. And I'm asking myself, why is this happening? And I think it's because there is a fear of increased interest rates, increased inflation, and the market is reacting to it, as well as I think it's an opportune time to take some profits before the Biden administration does whatever they're going to do. So I'm looking at it, and I want to share some of my thoughts of what I'm going to do relative to where I'm at, and maybe you can benefit from it. I should introduce myself. I'm Kerry Grinkmeyer. I'm the host of Best of Us Investors. I take a lot of my guidance from my tribe. I have about 18,000 people who come to my Discord, and we exchange ideas openly, and they give me ideas for some. Probably a year ago, I was pretty much in the big six, Amazon, Google, Apple, Microsoft, Tesla, those kind of stocks. And then they had pointed me in the directions of some smaller stocks. They are pretty much concentrated in the areas that I think are going to have some drastic improvements in the future in the way we live. But that's not what I want to talk about today. I want to talk about what I'm doing today relative to what I'm seeing in the market. So stick with me for a second. Let me put my notes together. Got a chart I want to show you that I spent a lot of time on trying to figure this out. I'll be right back.
Best of Us Investors presents Kerry Grinkmeyer.
Okay, what I'm looking at is I've got about $1 million portfolio that I'm managing. My direction is that I want 80% of it in the big six, the Amazon, the Google, the Tesla, Facebook, stocks like that. And then 20% I want in exponential growth. And those exponential growth is then I focus on biotech, 3D printing, robotics, 5G, and electric vehicles. That's all I do. And I do that because my mind is not good enough that I can take in the whole spectrum of the whole stock market. And I believe very strongly that if I'm going to succeed at this, I got to be smarter than the next guy in the room or everybody else in the room. So I do a substantial amount of reading, and I focus my reading on those subjects that I just mentioned. So as I said, I'm looking at this and I'm seeing my profits dwindle away. And I'm saying I need to hedge my bet. I told you in a prior video, I think the market will continue to have a good 2021 as the next relief package, the stimulus package kicks in. And I would estimate that we'll probably pump $3 trillion into the economy from the Treasury this year, giving that some relevance. In 2020, we went from a national debt of 20 trillion to today it's 28 trillion. So we put 8 trillion in. So I'm saying somewhere around a third of that will come in 2021. And I think that'll keep the market up. But I also recognize that I might be wrong. So I do have 4% of my portfolio, about $40,000 sitting in cash, and it's not making me any money. So I'm contemplating that I want to put it into treasuries because there's a direct negative correlation between the S&P 500 and the 10-year treasury. As the S&P 500 goes down, the treasuries will go up. Let me show you. I've put together a graph on it, and let me show you on my computer what I think is going to happen. Or I think the market is going to hold up, but how I'm going to hedge my bet. so that if it does go down, I have a source to offset any losses. Okay, so let's look at that chart. Okay, this is the chart I was referring to. And what I'm looking at is a comparison of the S&P 500 to the TLT, which is the Treasury. And I'm looking at from 2019 to today. That would be here. And I guess what caught my eye was that today the Treasury is at roughly 143, and the Nasdaq is at 38.74. Or excuse me, the S&P 500 is at 38.74. So I said to myself, okay, what was the last time that the Treasury was at 143? What was the interest rate, and what was the S&P 500 at? Today at 143, the interest rate is 1.34. That's the 10-year Treasury. That's what it pays. One and a third percent. Okay, the last time it was at 143 per share was back on 2/7, and the interest rate was at 1.59. So that's about a 25% difference in what the interest rate is today and what it was back on February the 7th. So what that tells me is that there's a discount here. And in my mind, that interest rate should be at 1.58. If it were at 1.58, it would be paying me more than 143. Okay, you with me there? Now, at the same token, I'm looking at when it was at 143, the S&P 500 was at 33.52. Today, it's at 38.74. So, in essence, the variance or the differential here is greater, and the reward is substantially less. So, in my mind, I'm saying the interest rate should be at 1.58 relative to this, and the payout or the price on the Treasury should be somewhere, I would say, rather than at 143, it should be at 150. Okay? Whatever it is, it's different. You're not getting paid the reward for the risk that you're taking here. Okay? And then you add to that this slight downturn that we're seeing in lack of confidence in the market. So my intuition is I need to get some money over here because if this continues to come down, the S&P 500, this is going to go up exponentially greater than the S&P coming down. So that's my, and I guess the other element of it is I don't like to see that the value of, I'm losing the profits that I've made thus far this year and not set up some sort of hedge. I'm okay with the stocks I hold, but if this market's going to turn on me a bit, I want to be in a position to profit from it. I don't want to go crazy with it. I don't want to liquidate everything, but I want to create a little bit of a hedge. So that's what I'm going to be doing. That's what I'm going to do. I'm going to move 1% of my portfolio, or $10,000, into this TLT, the 10-year Treasury. If, in fact, it just kind of stays and floats where it's at, I don't lose anything. I'm basically getting the same amount I'm getting in the cash I'm sitting in. If I lose a little bit, it won't be that much. But if this moves dramatically, I'll offset some of the losses that I will occur in my stocks. So that's how I'm going at it. I think it's real important, if you're going to be an investor, that you think things through like this and you don't just react. I mean, as I see my portfolio going down, my normal, I think, the gut reaction is get out. It's collapsing. I don't think that's happening. I think this is just some large investors taking profits, moving to safety. You've got to think of the world in the stock market as in risk and reward. And right now, they don't know what Joe's going to do. They don't know if he's going to get that stimulus package. Janet Yellen's telling us we're not going to raise interest rates, but we're seeing interest rates go up. Janet Yellen tells us we're going to have some more stimulus, but we aren't seeing it go through. So we're in an area of not duck and cover, but at least put the umbrella up in case there's a storm. And so I'm going to, as I said, move a little cash into treasuries and hang on and see what happens. I want to be proactive. I don't want to just sit and be abused, and I don't want to bail. I just don't think it's the right time to bail. So I wanted to share that with you. I also want to invite you to join our tribe. As I said, there's 18,000 of us over there. And to do that, you go to bestofusinvestors.com. You give me your name and your email address, and then I will send you a link, a ticket, if you will, for entrance into our Discord. What happens in our Discord? As I say, we have a number of channels with substantial discussions. And then for the Patreon area, if you want to see my portfolio, what it's made out of, if you want to be notified when I make some changes in the portfolio, as I buy right now, I will go over to the computer and I will buy the treasuries, the TLTs, and my tribe will be notified immediately of how many shares I bought, at what price, and how it is relative to my portfolio. If that's important to you, come and join us. I'd be glad to have you. I try to put out a video every day, and so I'll talk to you tomorrow.